it wasn't just Silicon Valley Bank. It then spread to Credit Suisse, and of course now this morning the CDS on Deutsche Bank are blowing out. So there's an issue here, and that issue will feed and drive my thesis, which is to say that they can never stop printing money, and they have to continually debase the currency, and therefore, in order to protect yourself from that debasement, you need to be in gold and silver mining stocks.
When we launched Three Ideas last year, our very first guest was investor Larry Lepard, who focuses on precious metals. We have a tracker that we share with Real Vision members that looks at each guest and charts their three ideas. And Larry's picks are by far and away the top picks. He has a return of 44%, nearly double his closest competitor on the show. So we invited Larry to come back, update us on his three ideas, and take a victory lap, though you might be surprised that he's quite reluctant to take that victory lap. We'll get to that in a second, Larry. Congratulations. But first, I'd just like you to walk us through an update of your global macro thesis in the context of how inflation has changed since we talked 6 months ago, the Fed moves, and of course, now we're in a crisis with the bank. So welcome back, Larry.
Yeah. Thanks for having me back, Samuel. And yeah, no victory lap yet. I haven't sold, and it's not over yet. But also, timing is everything. We were very fortunate. The time we did our last interview was September of last year, and that was almost the perfect bottom in a lot of the gold stocks. So better lucky than smart. But to go to your issue of the macro, I mean, we all can see what's going on, and the world really just changed on in the last couple of weeks when Silicon Valley Bank had a run, 42 billion withdrawn, went cash negative, and the FDIC had to step in, and then the Treasury and the Fed had to step in with a new program, the BTFP. It's basically saying what I've been contending and others have been contending for a while, that is that the Fed is trapped, and that the continuing tightening of monetary conditions to try and address the inflation problem was going to cause things in a highly leveraged financial world to break. And I think what we just saw was the beginning of that break. They haven't cut rates. In fact, they put them up 25 bips yesterday or 2 days ago. But, you can see, if you look at the futures, the Fed futures, you can see that there's a 90% chance that was their last raise. At least that's what the marketplace is saying right now. So the macro world has changed because financial conditions have really changed. And of course, there's some contagion here, as you and I were talking about before the show started. It wasn't just Silicon Valley Bank. It then spread to Credit Suisse, and of course now this morning the CDS on Deutsche Bank are blowing out. So there's an issue here, and that issue will feed and drive my thesis, which is to say that they can never stop printing money, and they have to continually debase the currency, and therefore, in order to protect yourself from that debasement, you need to be in gold and silver mining stocks.
I was just at a Real Vision meetup here in London, and you were on the tip of a lot of people's tongues as we were talking about your 44% return, and they wanted to know, so what do you do for gold then? And I mean, we're going to get into some of your ideas, but broadly speaking, do you have, when people ask you, do you look at gold ETFs? Is it more going down the gold mining route, like we're going to be talking about again in today's episode?
So everybody should, I can't give investment advice, right? Everybody's situation is different, as you know, and everyone should pick the risk reward that makes the most sense to them. I mean, at the core, what I recommend to my clients is that at a base core that they actually have some physical gold, whether it be coins or bullion, or trusted physical gold through a source like Bullion Vault or Gold Money or PHYS or PSLV, which are the two Sprott ETFs. I think you start there because they will protect you against inflation, the inflation that's coming, in my opinion. Gold stocks, the rule of thumb on gold stocks is that they're much riskier. And of course, the upside and returns can be much higher, but of course, so can the downside. And so, rule of thumb has always been, if gold goes up 10%, the gold stocks will go up 30%. And so, if you want to be more aggressive in your approach to this debasement bet, you buy gold stocks. And my fund, I sell my fund to my investors as, I'm extremely aggressive. I'm trying to make high rates of return, and they should allocate money to it that they consider they can live with the volatility, because it does go up and down, quite a bit. But if we're right, and I believe we are, about what's happening in debasement, the gold price is going to go much higher, in my opinion, in the next few years ahead. It was interesting. We've seen not closing prices, but for the first time since the Russian war started, the Ukraine war started, we've seen gold over $2,000 an ounce. And that's a very important level, Samuel, because, in 2011, it hit 1900 briefly. And then in 2020 on the COVID thing, it got over 2000 briefly. And then when the war broke out, it got over 2000 briefly. And after each of those, it's come back and corrected pretty severely down to 1700 in some cases, even lower a little bit in one case. And now it's back knocking on an all-time high of 2000. It's been there 3 times. And as you know, in the investing world, when things make new all-time highs, that attracts a lot of attention. And so I sincerely think that what's going to happen here is at some point we're going to break through that 2000 with authority, and gold's going to squirt up to 2,500 or 3,000. If that occurs, the stuff I own is going to go bananas. I mean, these companies are making pretty good money at $1,900 gold. They're going to make even more money at $2,500 gold.
Hi, I'm Raoul Pal, the CEO and co-founder of Real Vision. The financial world is a complicated world right now. It's a really complicated macro picture, and there's a lot of risks. Real Vision and our YouTube channel help you navigate those risks. So subscribe now to the channel and never miss an update. There is simply too much going on. So subscribe now. Thank you.
Well, let's jump into some of the stuff you hold. And just to be clear, full disclaimer, you do own this and your fund has stakes in some of the names that we're about to discuss. So I want to jump into the first one. That's Equinox Gold, traded on the NYSE. We were talking the last time and it had peaked in April of last year around $8.90 USD. In September, it went down to $3.56. That's when you and I spoke, and it's gone up to $4.65 around the time that we're talking. So that's a great return. But it was funny when you and I did our pre-call where we, chat before we come on, you weren't using the body language of a guy who was the top performer. You were a reluctant champion. So walk us through with a stock like this, why you're not taking the victory lap.
Well, I mean, I'm not taking the victory lap on this whole area because I know I know how difficult this area is, and I know how unpredictable it is. And, I mean, as an example, if the U.S. decides to put in a 100% tax on capital gains or 90% tax on capital gains on gold and gold stocks, we're about to get hurt very badly. And so, there's risk in the gold bet. You're betting against the government, you're betting against the Fed, and they're trying to defend the system they've got. But, I don't believe that it's likely that what I just described will happen. And so I'm always just a little bit cautious and you have to be, I think, if you've been in this industry a long time. I've been doing it for 20 plus years. And so I've seen, what happens. And that's why I think I'm a little more cautious on it. But moving to Equinox for just a moment, I mean, there's really nothing that's changed here. This is a great story. The Greenstone project is the big upside growth. I mean, they're at kind of the 500,000 ounce run rate. They did 532,000 ounces last year of production. They've guided for roughly 600,000 ounces this year. And, their big project is this Greenstone project, which they expect to open up in the first half of next year. And ultimately, this company is going to grow its production, they say, to about 1 million ounces. I think it could be slightly less than that. But the point is that even if they weren't growing, they're cheap. And then when you add the growth in my opinion, they can go beyond that. Ross Beatty, who was a brilliant, multi-hundred millionaire and made through gold mining stocks, is the largest shareholder here. I believe he's also the chairman of the board. He was until recently. And so, I think it's just a very good situation. And it's somewhat undervalued for a variety of reasons. One is because they have a mine in Mexico, Los Filos, which is in Guerrero, which is a difficult area, which from time to time, there are work stoppages there, but they generally get them resolved by, paying the locals more money. And so there are issues, obviously, but the Greenstone project that they're building up in Ontario is extremely safe. And, it's going to be a very, very, profitable and productive mine. And, they're trading at kind of 8 times EBITDA right now. And that EBITDA number will go up substantially when they get Greenstone open. And, I also think the EBITDA, the thing about this company is in general, it's funny. I mean, you would think, well, if I'm buying gold stocks, I want to buy low cost producers. I want to buy people who have really low cost pull an ounce out of the ground. And that is generally speaking true. However, in a gold bull market, when your AISC cost, that's the average cost to pull a gold ounce out of the ground, is relatively high, and you get the gold price going up, you've got a lot more operating leverage. So your profits are going to grow much more rapidly. as a result. And so in my opinion, we are going to $2,500 or $3,000 gold within the next couple of years. And if we do that, this company's going to make just a ton of money. 1 million ounces of gold at that kind of a level would probably, produce, close to $1 billion of earnings. So, and we've got a market cap here of, 1.46 US dollars. So, I'm sorry, I'm wrong. We got a market cap of what was it? Let me just make sure I got this right, because I always get tripped up on the difference between, I'm sorry, 1.46, that's right, US. Sometimes I confuse the Canadian dollar and the US dollar. Yeah, so I mean, a company that has that kind of future earnings power and is trading at 1.46 billion, I mean, to me, it's kind of a no-brainer. So I really like this company a lot. And even though you missed the first 30 or 40%, if you didn't buy it in September, you can't always get the absolute low. And I think, when I look at these things, Samuel, I'm generally not even interested if I don't think I can double my money. And, I kind of pencil this out at kind of 4 to 5x my money over 3 or 4 years. And that's assuming a gold bull
from the
market.
point where you got in, or if people were to get in on this opportunity?
Even today, say 4x from today. Now that's assuming gold prices continue to go up. I mean, if gold prices don't continue to go up, that's not realistic. I think it'll be a decent investment and make money and grow in value, because they're going to open up this new mine that's going to improve their earnings. But what you want to have happening is you want to have the real sweet spot in all these companies. You want to have growing production. You want to have growing, gold prices, which then make the margins bigger, and you want to have growing multiples of cash flow. And so if you start, if you find companies that are going to grow their production, they're going to mine more in the future. Find companies that are have a high enough price per cost per ounce to mine that when the price of the metal goes up, you get a real pop in the earnings, and then you get multiple expansion. That's a really great way to make money in these stocks.
And my favorite question is, what would make you rethink this? I mean, you highlighted some of the issues that they see in Mexico, so obviously that's on your radar.
I mean, look, if Mexico grabbed Los Filos, that would be really bad. I mean, you and I have talked, and I know you have a background in Mexico and are fluent and know the situation there. I mean, Mexico it's generally safe, but not perfectly safe, right? I mean, and all of Latin America, there are leftists. I mean, the government, the president right now is a leftist, although he's going to be term limited out in about a year. And, the risk of taxation or confiscation always exists. The other mines are safe. The Brazilian mines in particular, I don't worry as much about Brazil as I do about Mexico. And the mines in California are very safe. And obviously the mine in Toronto is very, and Canada is very safe. So Mexico is probably the biggest risk here, in my view, and that's a meaningful part of their production. So, but as I say, I mean, the positive on Mexico, I think we talked about this in our last conversation, is Mexico gets a huge amount of tax and royalty income out of these mining companies. It is the biggest business in Mexico by far, and they don't want to mess that up. And so I think a lot of these politicians, some of them will talk anti-mining, but they don't really act anti-mining because they like the money that comes out of the mining business.
Yeah, and to your point, you have those one-term 6 years only, and that's it for Mexican presidents. So
exactly.
The people on the right will certainly be celebrating their opportunity at the very last. Yeah. Let's jump into your second idea. That's Osisko Mining. This is a development story. You've called this Canadian mining royalty, the folks behind this. We take a step back. We look at the charts. We see it peaked around $3.82 Canadian in February of last year, then $2.60 Canadian when you and I talked, when you discussed this idea. And now we're trading around $3.84 Canadian. So update us on this company, and are you taking a victory lap here?
Yeah, I mean, yes, I'll take a victory lap. I mean, I guess on all of them, like I say, better lucky than smart. So the story on Osisko is as it was before, with a little bit of a little bit of slippage on cost and a little bit of slippage on timing, which is to be expected in the development story, right? The great risk when you've got a mining company that's trying to build a mine is that it takes longer than expected and it costs more than expected. And so, the company has no cash flow because they're not mining yet. And so, you're buying equity with, there's no multiple that you're looking at. You're just looking at what will they earn in the future, and then you're applying a multiple to that and discounting it back. And obviously the more years you have to wait for the cash flow to emerge, the the less you're going to make. So the Windfall project is really a fabulous project. John Brzezinski runs it, is royalty in Canadian mining. He built the Malartic mine. He's kind of a superstar. And the company has updated their PEA, and they have a full feasibility study out now, and it's really quite stunning. I mean, at $2,000 gold pre-tax, this mine is worth $2.8 billion, and sometimes mines trade at multiples of the NAV, like 1.5 to 2 times NAV. So this could be worth a great deal of money. And right now the market cap is 1.4 billion Canadian. The reason I like this one so much is the nature of the deposit. It's a big deposit, and it's a high grade deposit. There just aren't many of these. And it's safe. It's in Canada, which is a safe area, and it's being run by a world-class guy. So, what they plan to do is they have to do their environmental impact study this quarter, or this next coming quarter. They have to get the financing to build the mine, although they've done a couple of public offerings and raised $150 million. And they have to get the debt to build the mine. It's not a big capex for the size mine it is. Capex is only $607 million Canadian. I mean, this is for a mine that will throw off, $500 million of EBITDA in a year or two when it really gets running, assuming prices.
But to be clear, the capex is more now than it was when you and I had spoken.
Exactly.
And that threw you off a bit.
It threw me off. Not a lot more. It went up by like 20%. And the timing. I mean, before they were saying production in late 2024, and now it's Q1 of 2025. And it probably will be to Q2 of 2025. But if you're looking at a future cash flow and you get pushed out 3 to 6 months, it doesn't destroy. The mine's going to run for 15 plus years, throwing off this $500 million of cash. So you're paying kind of 3 times that future cash flow, but you've got to wait for the rest of this year and all of 2024 to have that cash flow. And of course, the risk is something, to go to your concluding question, what can go wrong here? It could take longer and cost more. I mean, that's just as simple as it gets. And yet, again, and I would budget for it where you've got enough margin of error that even if it takes 10 or 20% longer and costs 10 or 20% more, you're still going to be fine on this investment. And I almost kind of expect that. I mean, it would be a catastrophic change, like it's going to cost 40% more and take 3 years longer. That would obviously destroy the value of this investment. But in my opinion, you don't get a chance to buy assets like this as cheap as we bought it last September. Now, this one's run pretty hard. I mean, as it's up almost 50%. So I don't like it as much here as I did in September. But I'm not selling because I believe you still probably have a 3-bagger from here. But and again, it's not producing, so you're taking some risk. And some would say, well, is a 3-bagger the appropriate return for something that that has the risk this has? And you could debate that. I mean, one of the things I try to remember is that I really like the thing longer term, and if you have a 3 to 5 year time frame, I think in our last conversation I said this, if I had to pick a stock I'd put in my kids and my mother's portfolio and I could forget about it, knowing that someday it was going to be a multi-billion-dollar company, like $5 billion in value, this would be it, because the deposit's that good. I mean, you just can't find, and this is probably one of the top 5 deposits, undeveloped deposits in the world. And that's really, really rare.
So you do have 3 other ideas, new ones that we're going to get to, but I just want to get to your third idea that we had the last time you were here, and that's Guanajuato silver in Mexico, of course, peaking at about 0.70 Canadian in May 2021. And it's come down somewhat since then. But when you and I talked back in September, we were closer to about 0.40 around there. And now we're talking somewhere in the range of about 0.52. So give us an update on this company and if any of your views have changed since the last time we chatted.
No, if anything, my conviction on this has gotten stronger. They made a ton of progress. It's a great story. The most important thing here is that quarter on quarter production just continues to grow. In the fourth quarter, they did 836,000 silver equivalent ounces. That's 3.2 million ounce run rate. They've guided this year that they're going to do 4.8 million ounces. They've got 4 mines and 3 mills running. They got the Topia mill, which had been shut down, running again. So they've got real diversity in their deposit base. They've expanded their whole category ounces to 60 million. I love the CEO. He's a great guy, and I love his chief operating officer who helped to build the first Majestic mines. And so, it's got a ton of operating leverage. I mean, it's, the mining cost per ounce is in the $13, $14 an ounce range. So at $20, they make, say, $6 an ounce. But I think silver's going to 30. And as you can, do the math, you can see that the earnings here will just explode. A couple of things happened that also are meaningful since we last spoke. One, Great Panther, which was a company that was bankrupt, that they bought their last mine. They bought about $80 million worth of assets for $16 million from Great Panther. It was a brilliant move. They did it right before Great Panther went bankrupt. Great Panther had a big block of stock, and they placed it with a large institution in Boston. I wish I could say the name, but the institution said keep it quiet until it gets printed. But it's a really big, high-quality name that bought a big block of stock. It'll be very supportive for the stock. The other thing that happened is they got picked up into the SILJ, which is the Silver Junior ETF. And so SILJ went and bought 8 million shares. And that's a big deal because those ETFs are algorithmic. The stock keeps going up. They'll need to continue to add to their position. And that means they had done the work to determine that this was quality enough to be part of their ETF, which is a good thing. And then, finally, the underlying story here is they bought a bunch of assets really cheap, all of which were kind of somewhat broken, or the companies selling them were in financial distress. And so, they've got what I view as a couple $100 million worth of assets, and they paid, for 30, 40 million total for those assets. So they really bought them on the cheap. And if you look at the current market cap of the company, I've got them at roughly 168 million Canadian. So 74% of that's like 120 million US. I mean, this is a company that will have earnings power. If they do, let's say they do 4.8 million shares, and let's say that even if silver doesn't go up that much, they'll, say it goes to 24 as an example, which is almost there now. And that'll give them a $10 margin, 4.8 million ounces. That'll give them $48 million of EBITDA cash flow this year at the mine level. And, that's, the market cap is 3x that, which is very low. And I think silver, I think two things will happen. I think silver will go higher. And I think, the 4.8 will be on their way to 5 or 6 or 7 the following year, because they're being very aggressive about the way they're exploring and growing their production. And they've got a lot of capacity left in the mills that they bought. So it's, in my opinion, it's still, quite rich, even though it's gone up, since you and I last spoke, it's up 48%. Obviously I liked it better back then, but I still think it's, an easy 3 to 4x here. It kind of depending upon metal prices. I mean, they all depend upon metal prices. And I think everybody looking at this area should fully understand that, we need a bull market in the metal prices. And when you get those, these mining stocks go up multiples. But having said that, a bear market in the metal prices is just the opposite. These mining stocks do not do well if you don't believe in inflation, and you don't believe metal prices are going higher. So that's really, to me, the macro risk is probably the biggest risk you take in this area. Although, any company can fail. And if you pick good companies, you can kind of, somewhat diminish the risk of your company's failing. But even the best pickers make mistakes occasionally. There's a certain amount of, I don't know what's going to happen, right?
And just to be clear, you're a 3x, 4x return. You're a long-term investor in these companies.
Yeah, I mean, I'm talking over 3-4 years. I mean, it's going to take a while to get there. So that's the other one. Then I've got 3 other ideas.
Let's jump right into them. Your first one is Argonaut Gold. This is a Canadian gold company, exploration, mine development, and production. They're in the final years, or stages, I should say, of construction of the Magino mine in Ontario, Canada. We look at the chart, peaked at 3.98 Canadian in November of 2021. We've got 251 around April of last year. It's recovered a bit since those kind of cliff dives, but the more recent high of 0.73 Canadian in January, it's also off from there. So I'm guessing you see it as an opportune moment to come in and buy at low prices.
That's exactly right. I mean, this is a company that blew up. And in fact, both of the companies I'm going to recommend are companies that blew up. And one of the benefits compared to the three we talked about before is I've literally been buying both of these companies the last week. So you're not paying more than I paid if you get involved in either of these particular situations. And one of the things that happens in the mining industry, remember, a company has an asset, which is the ore in the ground, and you know what that asset is worth per ounce and so on and so forth. They also have mills, et cetera. And so one of the ways it's smart, in my opinion, to invest in the mining industry is you look for a pretty good set of assets where something went wrong and, and Mr. Market or weak-handed investors just threw it out. Oh gosh, they missed their numbers. They're not going to have a good profit this year. Screw it. I'm not going to wait around. I'm going to sell it. And what happens is they just get dumped way beyond what is reasonable because, the management teams, I mean, again, you've got to start with a good company. I mean, if it's a shitty company, and they blow up, well, then they might go out of business. But this is not a shitty company. This company has a lot of assets in Mexico. They had a lot of cash flow out of those assets. They had trouble with some of them. They're older and they're tired and they're high cost. And, at $20 silver, they were having a hard time making money on some of those assets. So they shut down a couple of the Mexican operations, which impairs their cash flow. And then the Magino project, as you mentioned, is the future of the company. And they had a serious problem there with a cost overrun. And so when that cost overrun was announced, the stock just got annihilated. And the combination of that and the poor performance in Mexico has made this just an unbelievable bargain. And again, I'm comfortable that that's true because I know the guy running this thing. Richard Young is the CEO of Argonaut. Richard Young built Teranga and sold it to Endeavor Mining. He personally bought a ton of stock in this company when he moved over to this company, became CEO about a year ago, I think. And he completely believes, and my opinion is he will fix this. And if and when he fixes this, it will be worth multiples of what it's worth right now. It's a $350 million market cap. This is a company that will produce, when it's fixed, and I think he will get it fixed, it will produce 450,000 ounces of gold in 2025 or 2026. I mean, that's worth billions of dollars, and yet the market cap is 350. Why is it 350? Because it's broken. But they don't need any more capital, and the Magino mine or the Magino mine is scheduled to come online in mid-May. Now, again, mid-May could be July, but 2 months isn't going to destroy the thesis of a mine that's going to produce cash for 15 years. So, and I think if you go look at the stock chart, this thing's totally bombed out, completely bombed out. I mean, it could have go down a little bit from here, sure. If it did, I'd buy more. So, Magino, Argonaut is a turnaround story with a very high quality manager that's selling for a fraction of what it would be worth if it were running correctly. And in my opinion, the high quality manager will have it running correctly within a couple of years. And so for taking that risk that is broken, you could easily make 4 or 5, even 10 extra money.
What would make you rethink? I mean, you just said if it went down even more, you would buy more.
Not much. I mean, you don't have a real Canada risk. The Mexico stuff is probably when Magino's running, the Mexico stuff will be less than half of the company. But there's always a Mexican risk. I can't really foresee a problem here. I mean, I guess lower metal prices. The Mexico mines are high cost. Magino's not. But the Mexico mines are high cost. And so, those wouldn't have much value if metal prices don't go in the right direction. I mean, again, remember that these multiple upsides that I'm saying are based on my belief that we will have $30+ silver and $2,500 plus gold sometime within 2 years. And I feel like that's a safe bet given the macro stuff we kind of talked about in the opening about how, the Fed is being forced to pivot and print more money. And, as a result of that, the precious metals are going to continue in the bull market that started in 2016. So, to me, it's a very good calculated upside bet based on a high quality guy and a really low price.
So I just want to move into your second new idea. That's First Majestic. This is a Canadian silver mining company that operates in Mexico and the United States. Looking back at its most recent peaks, January 2021, 23 Canadian dollars. February, $8.11, and then this past November, down just below $9. What has you interested in the company? What's the narrative here?
Yeah, the narrative. This is a pretty simple story. First of all, I love the CEO, Keith Neumeyer. He's been in this industry for a long time. He built this company from nothing to 32 million ounces of AG equivalent, silver equivalent production last year. So I'm a big fan of the CEO, and that counts for a lot. But he made a mistake, and they made a mistake. They were heavily into silver, although a big piece of the revenue comes from gold. And they went and they bought a company in the United States. They bought a mine in the United States called Jarrett Canyon. And boy, did it turn out to be a mistake. It was just everything that could go wrong went wrong, and there were enormous cost overruns. And so, they were making money on all their other mines, but they were losing money on Jarrett Canyon. And what they finally gave up, at least temporarily, maybe when prices are higher, they'll come back to Jarrett Canyon. They decided to shut Jarrett Canyon down and just stop losing money. And so that alone will make things much better. But the problems at Jarrett Canyon and the way that impaired their earnings have really driven the stock down to a valuation that's just silly cheap for how much, what this company has in terms of production and assets. I mean, they produced 32 million silver equivalent ounces last year. They're going to produce 45 to 50 million silver. This makes them one of the top 3 or 4 silver production companies in the world. And again, if it were running correctly, it would sell for 4 to 5x today's price, but it's not because of Jarrett Canyon. And the market threw the stock in the penalty box, and everyone just puked it. And my belief is that they'll fix it. They started fixing it. They shut Jarrett Canyon down, so that cash flow drain is gone. They've got some high costs in a few other mines. They're working on solving that, and higher silver prices will again provide enormous operating leverage. So, another example of they've got a really good balance sheet. And 2 other things that I think are very meaningful that I always look at and I love to see is they're actually buying back their own shares. When the shares are this cheap, they're like, this is ridiculous. We've got cash. We're going to buy back our own shares. Also, a senior officer recently, the VP Corp Dev, just bought $150,000 worth of stock in the open market. I always love to see that, right? Here's a guy who's on the inside, who knows what's going on, and just said, this is ridiculous. And so he put $150K of his own money into it. So, again, good CEO, great assets, big company, effed it up. Market punished it enormously, over-punished it, in my opinion. And, I think we've seen the bottom. And, $30 silver, no Jarrett Canyon problems, working on some of the other projects they've got going. This stock should double or triple easily in the next few years, in my view.
What would make you rethink that if they weren't able to turn things around with the Jericho
location? The Jarrett, they can leave it. They can leave that not working, and they'll still do fine. I mean, this one is actually. I'll tell you what. This is a big Mexico risk, right? I mean, more or less all of their production is in Mexico. They got a few other things, but and so if Mexico went south, this would not be a good situation to be involved with. Again, as we talked earlier, I'm okay with Mexico. I think Mexico's going to be fine. But this will feel, any Mexico pain will be felt here, and you're really making a big bet on that. So, that's the risk here.
Let's jump into your third and final new idea. And I think it's really going to throw people for a loop. That's Bitcoin. Of course, everybody knows the story there. Peaked around $64,000 in November of 2021. Bottomed out the last time south of $19,000 at the end of last year, and now trading around $28,000. Everybody knows that, but what's interesting here is this is kind of heresy for someone coming from the gold sector like you. So This is more of a deeper, less about the numbers, the time horizon. This is more of a deeper thesis, I would say. That you have.
So, and I would just ask everybody to try, gold people, to keep an open mind. I mean, gold was the best money we had for 5,000 years, and it still is fabulous, analog, sound money. And
hold off before you push that tweet button to Larry, please. Yeah,
exactly. So, what I think some people are missing, and I get a lot of gold people don't like Bitcoin, and I ask them to try to keep an open mind about what it is and to try to fully understand what it is. And I get their suspicion of it because, frankly, there's been a lot of promotion. There's been a lot of bullshit. Most all of crypto, in my opinion, is fraud. And there was the FTX fraud, and there Dogecoin. There were so many frauds But the average gold person is like, I'm not getting involved with that. This is an entirely fraudulent area. And so that's all, to me, that's a bunch of noise.
For many of those, that's playing out in courts now and with major
Absolutely.
government investigations.
Yeah, exactly. But the signal in all of this is that a group of guys, and I think Satoshi was kind of a handful of people, we've studied it, a group of people actually invented what appears to be a digitally sound form of digital scarcity, immutable digital scarcity. In other words, they created these 21 million coins that are verified by all of the nodes and all of the miners every 10 minutes. And there will never be more than 21 million of them. So here you've got something, it's a digital entry with a public key and a private key. Here you've got something that the government can't print in the same way that they can't print gold. And as a result of that, and people have a hard time getting their hands around it because they can't touch it or feel. A lot of gold guys are like, well, gold has other uses and that's why it's valuable and blah, blah, blah. No, gold was just chosen as money because it was the best form of money we had until that time. I always say to my friends, money is really just a ledger. Before even gold existed, cavemen were marking sticks on walls of caves saying, I killed 3 bison, you owe me 1 because we ate them all together. And so money is just keeping track. Who owes who what? What are the social obligations that we have to each other? It doesn't need to be physical or tangible. The dollars you have in your bank account aren't physical or tangible. You just get on the web, you see, oh, I got this many dollars, right?
But money is confidence. Confidence in
Exactly.
countries, at least fiat currency is. So
Agreed.
given the extreme volatility that we've seen, where do you get your confidence from? That scarcity that you were talking about?
The scarcity, the mathematical scarcity and the immutable digital proof. And you're right, money is absolutely confidence. And there are only a small group of us now who believe that this is money, but I believe that the trend is that more and more people over time are going to come to see what we see, that this represents a really digitally perfect form of money. And the reason is that it can't be printed. And the other reason is it's actually deflationary. Even in the gold instance, the gold grows up every year, by the 1.7% that we mine. And so in 40 or 50 years, there'll be twice as much gold in the world. In 40 or 50 years, there'll still only be 21 million Bitcoin. And so as more and more people come to see that and understand that, I believe the prices kind of continue to go up forever. And I can see $100,000 Bitcoin, $1 million Bitcoin, $10 million Bitcoin, within my kid's lifetime, because there's a limited supply. And we live in a deflationary world, and we need a deflationary currency to fit with that. And, Keynes was wrong. All gold people know that. Keynes was completely wrong. Printing money does not create wealth. It just redistributes wealth. And so the point I'm trying to make is that, I think gold is analog sound money. I think Bitcoin is digital sound money. And the reason I say that, and it takes a lot of time to understand how it all works, the difficulty adjustment, the halving cycle, et cetera. There's a lot to it. The private key is the public key is hashing, the question I think you will ask me, and you should ask me, is what could go wrong, Larry? Why would you not, what could make Bitcoin fail, right? Because I get this from a lot of my investors. I'll tell you 2 things. One would be if the technology didn't work, if we had a real legitimate technology failure. And when I first invested in 2013, that was my great concern. I thought, this is a computer, it could blow up, right? Who knows if it's going to continue to work? Here we are, 10 years later, 2023, hasn't blown up. Every minute, every 10 minutes, there's another block. People have stolen other people's keys, but nobody has hacked the fundamental security of the coins. Nobody. And so, we've got 780,000 blocks that have been mined since inception. You can see where every single coin is. So, there's the possibility of technical failure, but I feel like, 14, 15 years into it, I don't think that's a high possibility or high probability. The other thing that could make it fail, in my opinion, would be if everyone lost interest in it and there were no longer any adoption. Money really is just a social illusion. We all agree the dollar has value because the U.S. has warships and it's always had value, and we're a big country and so forth. Bitcoin, what it needs to hold its value and continue to grow its value is it does need new adoption, and it needs more and more people coming into the ecosystem to make the price of it go up. But we can track the addresses, we can track the hash rate, we can track the use. And the fact of the matter is we're seeing all those things. Continually. And it's really interesting, Samuel. I was an investor in the venture capital business for the first part of my career before I got into the sound money stuff. And I invested in the internet in 93 and 4. And this reminds me so much of the internet, of the network effect of the internet and the way the infrastructure got built out in the internet. I mean, we invest in AutoWeb and Realtor.com and a bunch of other companies. And in fact, I'm putting together a fund with some other guys to invest in the Bitcoin infrastructure, so that if you're not comfortable with the volatility of Bitcoin, you could be an investor in this fund and capture the upside of the idea without necessarily having the volatility of the coins. But even the volatility, I think the way you adjust for that is you keep the weighting modest and you dollar cost average over time. And there was a chart out recently that showed even if you had started dollar cost averaging when Bitcoin was at 68,000, which was the last peak, and you had bought an equal amount every week from then until now, and that 68,000 was sometime last year, you'd actually be ahead right now, because you would have bought a lot down at 16 and it's back up to 28. So, that's how I advise people to do it. And I say to my clients and other people I talk to, the only wrong allocation here is zero. Why do I say that? You put, $10,000 into this thing, you could lose the $10,000. Let's face it, every investment when anyone makes an equity investment of any type, you have to be prepared to have it go to zero. My wonderful first boss, this really old sage guy, said, Larry, the great thing about this business is you can only lose 1x. And what you want to do is you want to look for 2 to 10 to 50x. And I actually think Bitcoin could go up 2, 5, 10, 50x over the next 10 or 15 years, because there's a trend here where young people are adopting it, and they're adopting it in favor of gold. They're saying this is a form of digital gold. And I think they're correct. Now, that doesn't mean gold's going to go away. And if you look at my fund, the fund I manage, my Bitcoin weighting is like 15%. I'm 85% silver, gold, and silver and gold miners. But I have, and some people have left me and said, look, I want gold and silver. I don't want any Bitcoin. Why the hell are you doing that? I'm out. And I said, okay, fine. You're welcome to do that. But let me just tell you, I think you're going to regret it, because the upside optionality of that 15% is bigger than the upside optionality of gold. I mean, gold has never gone up 5x in a 2-year period. Bitcoin went up 5x in 20 and 21. And I think it will again. I mean, every low is a higher low, and every high is a higher high. I mean, this past low was 16.5. The one before that, where I was doubling down, was 3,500. I think the next high will probably be in the 150 range, and then it'll probably correct back to 30 or 40. And I'm dollar cost averaging every week, but frankly, when it gets to a certain multiple of its 200 day, I'll probably stop that, recognizing that I'm not getting it quite as cheap.
Well, Larry, I have to say it was a surprise for me when you messaged and said you wanted to talk about your thesis on Bitcoin and what your thesis was. But something that wasn't a surprise for me was that you're the number one performer on 3 Ideas because of, frankly, your body language, your experience you walked in with on that very first episode, and the lack of hubris, frankly. And I could say the same thing about the victory lap you're taking. Still, the humility that I see, I think it's a real masterclass in a way what you're walking through with us. And I would love to see you on an episode of My Life in 4 Trades, because I think you can walk us through this.
We'll do that for sure. Yeah. No, you're very kind to say that. I mean, I've got 45 years of mistakes, as Greg Foss likes to say. You get humbled. I'm 65, so you get humbled over time. I'm just a squirrel looking for a nut, and I think this stuff is going to work, but there are no guarantees.
Well, Larry, we'll be keeping track of you and seeing if it's humble pie or another victory lap the next time around. But hope to see you back in this space again. Thank you so much for your ideas and your time.
Happy to do it, Samuel. I really enjoyed it. Thank you.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.